Will lightning strike twice for energy, or is there another generational opportunity about to emerge and in which you should invest at the moment? Let's get right to the floor show. Joining me on this first trading day of the year, VettaFi Vice Chairman Tom Lydon here with me in San Diego, and Carnivore Trading CEO Dutch Masters, because Dutch shorted the NASDAQ 100 last year and made a ton of money. We're going to ask Dutch in a second what his new trades are. First to you, Tom, welcome. Thank you so much for welcoming us to your now hometown of San Diego.
Great seeing you on the Best Coast.
Okay, yeah, that's right, because I'm from LA, but I love me some New York and New Jersey. Sort of New Jersey. Okay, anyway, let's be honest here. People are looking for the next big move in this market, and specifically a sector. What are you predicting?
Yeah, it was a tough year last year, but if you look at opportunities from a valuation standpoint, and a lot of people aren't fans of China, there's huge opportunities. You look at the experts on Wall Street, they haven't seen valuations this low in over 20 years. And if you...
Wait, let me drill down. China? You're talking about Chinese ADRs?
Single-digit price-earnings ratio. We saw for 10, 20 years huge growth in the China space, but to some degree, Liz, they've done it to themselves. The government hasn't been a big help. However, the government is stepping in. Real estate is a big boom, also from a capitalistic standpoint.
Even with rising rates?
Well, with rising rates, we're not seeing rising rates in China like we're seeing rising rates here in the U.S.
Okay.
And the other thing is the banking sector in China has been helpful to the economy. Now, one thing we have to remember is there's a big problem out there with having Chinese stocks listed on U.S. exchanges. But they've got 2 years to kind of figure this out. By the time that's all figured out and we've worked it all out, the market's already going to have moved. So experts we talk to are saying this is one of those generational opportunities.
Okay, now I get to just crack it open with Dutch Masters. And Dutch, you've got to tell me, what is the trade that you have already made today for 2023?
Hey, Liz, it's a real honor to be on your show, the first show of the year. Thank you. We have made 4 trades today. It's 2022 was a weird year. I found myself buying marine shipping stocks and fertilizer stocks, and it looks like 2023 is going to start the same way. We're buying gold. We've bought NUGT. The ETF. We also bought AU, which is a individual stock in the gold sector. We are shorting real estate with SRS, and we shorted LGIH, LGI Homes as well.
Why are you going long gold? What is your thesis behind that?
Well, I think, Trader Z, our resident genius, he knows how much I hate gold and has been percolating this idea for a little while. The technical trade is there, and so we're going with what the charts are telling us. We think that, with the dollar doing what it's doing, with the yen actually doing what it's doing, that's kind of driving the gold market.
You were kind of a genius, my friend, because you shorted the QQQs. What did that trade net you guys?
321% was the year-to-date for last year for Carnivore.
Okay, that was a great trade last year to short tech, but if you look over 5 years, the QQQs, not the short, but if you look at short QQQs over 5 years, it's a disaster, down 97%. So it does lightning strike twice. Are you going whole hog into tech?
So, no, one of the things that's interesting is people always think that when something is down, or they're talking about the S&P being a value right here, things can go a lot further down than you think they can. And for example, I'm sure there's a lot of people who bought, ARK and thought that ARK was, a value. It's now down about 81% from its high. We see the S&P at about 3210, which is down another 600 points. And if the recession is properly valued, the S&P ought to be somewhere around 2887. We think that the first quarter is going to be just terrible. We're already seeing that, it started in the green this morning, and, what happens? They sell it off right away. And I think that what's going to stop this and bring the, bring the Fed back around to a pivot is a lot more pain.
To that point, Tom, the Federal Reserve, how do you see the pivot or at least the pause? Is that going to come mid-year or will it come at the end of the year? They have said don't expect it till 2024. And how does that play into people who are watching right now and saying, I would like to invest some money?
Yeah, it's a balancing act for sure. And all eyes are surely on the Fed. Most are saying we're going to see another 1%, and that's going to happen over the course of the year. But kind of what Dutch is saying is we're still in inflationary times. And gold, as far as his buy, is the right idea. It tends to be more of a second half player, Liz. So by balancing out in commodities, especially gold, makes a lot of sense. However, you don't want to be long bonds. Long bonds, especially long duration, treasuries, corporates, stay away from those and specifically those ETFs for at least the next 6 months. Okay. I think by the summer, we're going to see a little bit of relief.
Yeah, your gold trade is looking good today, Dutch, up about 1%. I do have to ask both of you, look at Tesla. Tesla's another disastrous day to kick off this first trading day of the year. Started off down about 9%. I believe last I checked down 12, then 13% to the downside. Dutch, would you consider, maybe nibbling a little bit here at this low price?
No, Tesla's dead money. They kicked him out of the ESG funds. He's no longer their favorite dude anymore. So the media and the people that run all these funds that are supposedly geared towards ESG are not buying the stock. They're selling the stock. I think there's a lot of damage that's been done to the stock technically. It's going to take a year for this thing to work out.
Okay. All right. It's great to have both of you. Thank you very much. Dutch, Happy New Year.